What's up, everybody? It's Mitch here with Century 21 and the Kamar-Cleary team in Peterborough. We've got your October statistics. This is your Peterborough market update. Here's how we're going to break down the video. I'm going to go through the same metrics I always have in the past: months of inventory, last month's sales, average sale price. We're going to talk quickly about what those mean, and then we're going to break it into what that means if you are a first-time buyer, a move-up buyer who's looking to get into something a little bit bigger, a downsize baby boomer, and then if you're an investor, then finally just some final market thoughts about the direction we're heading, and then we'll wrap it up. All right, guys, let's get right into it. Okay, so months of inventory. This is one of the most important metrics when we're talking about where the real estate market is right now and where it's heading, and really how we expect prices to react in the short term. We are stuck at nearly the exact same months of inventory as we were this time last year. So October's statistics, we were at 0.6 months of inventory, still well below that 1 month mark. Last year we were at 0.7. Now, something that we need to mention is that even though our months of inventory, which is derived by taking the amount of active listings and dividing them by the previous month's sales, so it's a bit of a speedometer, so to speak, even though our months of inventory at a glance appears to be nearly identical, it's actually a much more bleak picture, because the inventory at the end of the month, active listings at the end of the month in October 2020 was 101. Now at the end of October in 2021, we only had 61 active listings. So our inventory is down, our sales are down also, so that the ratio stays the same. But what happens is that when the inventory gets this low, it has a bit of a self-fulfilling effect where there's so little inventory that there's no liquidity in the market. People can't leave their current home to go into something else because they're too scared there's not enough out there for them to buy, so they're hesitant to sell. And also, there's only a certain amount of transactions that can be facilitated when there's so many people fighting over so few homes. When you have new first-time buyers and investors all fighting over some of this bottom price point material, it really restricts how many transactions can even happen, because if the inventory grows right now, we can see more sales happen, and the months of inventory can still stay equally as low. But now the inventory is just getting so low that as a ratio, it can't really move much further down. Everyone's trying to transact and they're just getting blocked. There's really just a total supply crisis going on right now. On to sale price. You know what these numbers mean. Whenever we see the inventory getting that low, it's obvious what's happening, at least in the short term. I'm talking 3 to 4 months in terms of prices, and that means rapid gains. So far, as I'm shooting this video, we're midway through November, and this seems to be holding true. I'm seeing old price ceilings, so to speak, in certain neighborhoods, or sort of clear situations where what the comparables said something should have sold for, they're well exceeding that. And I think that we're going to see some big month-over-month gains at this point, starting to look similar to what we saw last year, January, February, March, where it rose 30K a month. The average price in Peterborough, we saw a $100,000 jump in a 3-month period. We're back into this type of inventory squeeze, and it looks like we're heading back into that situation. Now, seasonally, we're about to come into a slow season where most people would typically take a back seat in terms of their willingness to transact in real estate. But with the amount of investors that are pushing into this market right now, which is a recurring theme, that I'm seeing many more investors versus end users as a ratio, that I think that personally, a lot of the investors I know that I'm working with, a lot of these people will continue to keep their foot on the gas right through the holidays in terms of the buying perspective, because this is a lot of their business or retirement money. It doesn't take a break the same way that somebody does when they are taking their family to showings and they have to get the kids to their house and they have to make these decisions with parents, etc. This is, individuals out there, profit oriented, and in my own experience, did not as much of a break letting off over the holidays. They're still interested in deals because there's been such a barren landscape for deals for so long. But a lot of people trying to get in right now when they know there's this big wave of appreciation coming. So what about our average sales price this month? The average sales price in October 2021 was $659,000. That's up 35% over last year. And if you remember last year, we were already blown away at the gains we'd seen from the year previous. So we're seeing an absolutely ridiculously large jump when you view this graphically, the amount of gains that are happening in 2021. It's absolutely massive. So the average sale price at the same time last year was $487,000. I'm cutting off the anything that's below $1,000 for the sake of simplicity here. So we went from 487 to 659,000 in 1 year. I remember last year this time when people were looking at secondary suitable bungalows in town, and it was a lot to see 487 when the average price of a brick bungalow became 500,000. It was kind of like a threshold that it broke through. Now we're talking about 660 for the exact same thing. It's absolutely insane. Let's get on to a little bit of what this means for anybody who's looking to transact anytime in the near future. For first-time home buyers, there is a lot of uncertainty right now. We know interest rate hikes have to be coming. We've been at record lows for far too long. There's systemic inflation across all asset classes. We know the stock market's inflated. We know our grocery prices are going up. We know the price of everything recreational is going up and the availability of everything is going down. So it's your meat, it's hot tubs. It doesn't matter what you talk about. It's hard to pick something where the price hasn't gone up what feels like, 10 to 20%. And so interest rates are needing to rise to tame the overall inflation in the economy, and not to mention this runaway real estate market. Now, what happens when that happens? It seems right now that there's a lot of investor froth in this market, and it's becoming this self-feeding sort of thing that's playing out where the investors are creating and continuing to push their own gains ahead. And we see this all the time when you look back in the history of hot markets and how they evolve. What scares me is that I do see a lot of the end users are becoming much more timid right now, and the investors are plowing ahead. So it shows that we really might be getting out of touch with the fundamental baseline equilibrium of what these prices should be right now. And I want to go back to the first-time buyers, because in terms of what your timeline is really going to matter. If we see interest rates start to get hiked spring of this year and they continue to have to ramp them up, there's going to be a very volatile impact in the real estate market in terms of how investors are going to react and what the government signals in terms of if the market starts to waver a bit. Are they going to jump in and try and save it right away? Or are they going to increase amortization periods as they simultaneously increase these rates to keep affordability the same for first-time buyers? We don't know. There's a lot of unknowns coming up. And as the rates start to increase, if there's any taper period where there's a couple months where people trying to head for the selling market and everyone goes like cattle all at once, and then investors simultaneously back off because they think that price drops might be coming, things can tend to all of a sudden, the reflexivity, so to speak, is that there's a feedback loop where all of a sudden things can just start going in the opposite direction. Now, we know we have a fundamental underlying supply and demand crisis which will not be dealt with even if prices do start to drop. So a lot of the conversations I have with people right now are that there will be a very quick floor, and by quick I mean if we saw prices drop 5 to 10%, it's still a big drop, but it's not that big when you consider that they rose 35% last year and the year prior, very similar numbers, that as soon as we see them drop X amount, it's very likely that we're going to see people pick that up and put a floor underneath that and say, well, I'll take it at this price because I don't know how long this is going to last, because no matter what, we simply still do have a lack of inventory according to the amount of residents that we have and the population growth we are continuing to see. So on to that, first-time buyers, if you have a period where you might buy a home and you think you might want to sell in the next 2 years because your job could require you to relocate, any instance you can possibly think of where you might buy today and have to sell in a couple of years, you are exposing yourself to a risk. Absolutely. If you have a 10-year timeline where no matter what, if you sell this property, it's going to be when you're going to rebuy another one again, you're not going to totally leave the market and have to realize a loss if it happens, then yes, it's all relative, that no matter when you get in, as long as you're staying in the market for good, whenever you do go to upgrade and buy your next home, you're going to be simultaneously buying and selling in the equal type of market, whether it's hot or whether it's slow. If your property has gone down in value, then so has everything else relatively, and you've been paying off your mortgage. Now, I think that the losses are going to be capped, like I said, versus what we see in some of the runaway instances in the past, where we see the subprime crisis of 2007, 2008. There was a lot of vacant homes in those situations. We know we have the rental market crisis that's going on right now too, and I just don't see that we have this. I don't see the same fundamentals as what happened in some of the real big busts, where you see markets losing 40% of their value over the period of a year or longer and having a hard time getting going again. No matter what happens with property values, we still have such a massive rental shortage that the rental rates continue to rise, and it's somewhere there's going to be an arbitrage point where they're going to pick each other up too, where there's going to be a stop. You know, they can only drop so far, and people say, hey, this is a cash flowing property at this point, I'll pick it up. So I don't think it's going to be that free fall, bottom fall out of the market that we've seen in the past. But then again, you never know. That all depends on banks' ability to continue to lend if we see a contraction, a large contraction event. Move up buyers, and this really does apply a lot of anybody. If you're moving up, if you're going from a little bungalow, you've got a third kid coming and you're moving up into, you want to move into a big 2-story, or if you're a baby boomer and you want to sell that big 2-story home, you want to downsize into a condo. Anybody who's making a move right now, my best advice is that you want to make quick moves. You want to make quick moves. In this market right now, most times people are buying first and then selling, because it's much harder to find something that you find palatable, to find that home for you and actually make sure that you win it in a bidding war, than it is to sell your property. So rather than the old school sort of sell it first, see how much I get, know how much I get to shop with, have this 4 to 5 month window, then I buy. Right now it's more, make sure that you get what you want, you have a nice tight window, and you sell relatively quickly after you buy, so that you encapsulate and insulate your gain or loss either way. The market's making big moves on the upside right now, and the absolute worst thing that could happen is if you sell your property, you wait on the sidelines for an extremely long amount of time, or a prolonged period of time, while you're trying to buy. Property values continue to rise and you keep getting beat out and you can't find anything you want. You want to start shopping right away, have a good ballpark estimate of what your home is worth, and then get ready to make a simultaneous, you buy, knowing full well what roundabout value you're going to get for your house and that it's going to sell extremely quickly, and then you put it up for sale. If you're a baby boomer and you're trying to time your outro here about how you're going to leave this market, you're just sitting on a property, you don't need to rebuy, you're going to be a bit of a snowbird, you're going to rent while you're back home over the summer, or you have other accommodations. Right now, really, any time is a great time to sell. You can't try and time this too perfectly, because there's always problems where as soon as this thing starts to turn, it will continue to go that way. I remember when I tried to sell my own property back when the foreign buyers tax was instituted in 2017. The moment they came over the podium and made that announcement that they were putting that tax in place, it felt like the air came out of the market overnight. The bidding wars stopped. Arguably, we still got right near what was the market rate at that time, but it started to turn so quick that for the sake of a month or two, if you sell right now, yes, you could be leaving gains of tens of thousands behind, because every consecutive month it's plausible right now that the price are going to continue to tick up. The problem is at this point you've already made so much, you're really going to try and risk it for that extra little gain, when if things actually did turn, when as these the strength of these interest rate announcements can keep ratcheting up, and barring all other risks that are pending on things that could shake up the market, are you really going to try and make these extra kind of 30,000 when you've made 300,000 over the last couple of years? Or do you just get out now so that you can close your home while things are still good, people still get financing, and there's no risk of a real big shakeup, and someone who's under contract to purchase from you can't even close anymore? So my opinion for most people, or advice for most people who don't have to rebuy right now, is, hey, as long as it's convenient for you right now, this is absolutely still a good time. Beyond the holiday season, I would say, as we're coming into December right now. But look, classically, it's not the most advised time to sell. January, February, March, when there's still cold snow on the ground. Look at the January, February, March we had last year. Absolutely blazing hot. And in this low inventory environment, it's likely that it's going to be the same. Quick sale prices, high over asking bids. So on to investors. When I'm speaking to investors, I feel like I'm almost speaking to every of the previous groups that I was talking about, because it seems like everybody's an investor right now or looking to invest. And that's part of the problem, is that the blitz that came into our market last year, everyone's well aware of it, and people are tired of hearing of their friends who made $100,000 last year while they didn't. Everyone's trying to scrounge together a down payment, partner with somebody, get some parental money on board, find some alternative financing. Everybody is trying to buy rental properties, and for every property under $600,000, multifamily or not, a lot of the single family homes out there, if you're in there trying to buy one as an end user, odds are you're competing against a lot of other people that are investors. So in terms of investment advice, what I would say to that is we filmed a lengthy market update episode, nearly like a 50-minute long marathon for Matt McKeever's channel the other day. That's going to be airing in a couple of weeks. And I can link you guys over to that one, or keep an eye out for that when it comes up. It's going to be our Peterborough update. And we dive in a little bit more into what we see as the plausible inroads right now for anybody who's looking to make some money on their money in this, really overinflated global market we've got going on right now. We have real estate's inflated, stocks are inflated, just about everything you can think of. It's hard to figure out where you can make any money when there's so much inflation happening, and the real true cost of holding cash is very steep because your buying power is going down every day. So everyone's looking to make their money, make some money. We talk about it a lot in that video I did with Matt McKeever. Just give you a little teaser. Realistically, we're seeing a lot of great future in sort of mid-tier Airbnb properties, and even some in the high-end rental classes. So your cookie cutter duplex deals, for the most part, without unethical practices in terms of how you're going to increase your rent roll, a lot of those deals are long gone. And you got to look into other ways about how you're going to make money, and do it in a way where you can sleep at night, and do it in a way that's going to actually be in line with what this community needs, which is some good high quality rental stuff for baby boomers, and also some new unit creation. Everyone's got to be thinking about, how do I create new units? What's coming down the pipes with garden homes? So I won't go any further into that. Hopefully you guys enjoyed the video. Reach out in the comments, whether it's on Instagram, YouTube, doesn't matter. If you're not following the channel, please subscribe. I love seeing new subscribers come on. It motivates me to keep doing these things. Give it a like if you got any value out of this. It does help the algorithm. It pushes it out a little bit more. It helps our cause. And if you guys have any questions whatsoever, we're always doing sort of early consults with anybody who's looking to transact, buy or sell in the next 6 months. You want to get on the line and have a call with me or Tamer or anyone on the team, just reach out to us. I've got my email, everything down below, and we look forward to hearing from you guys. Everybody have a great weekend, and we'll look forward to chatting with you soon.